All right, everybody. I think we're going to go ahead and get started. Some more people may jump on as we get going, but I'm going to kind of remain quiet for parts of this so that he can do his presentation. I'm really excited about this one because a lot of people overlook or get confused about things related to finances, accounting, taxes. And the sad thing about it is you don't know what you don't know until a problem situation. So you don't know until you do your taxes at the end of the year that you owe a whole lot more than you anticipated, or you don't know until you have an issue that you should have separated your business from your personal stuff. So we're here to help you avoid those problems and hopefully get some clarity on a lot of the questions that freelancers or really any service provider who's doing business online should know. So this is Eric. He's amazing. He has so much information. Please use him as a resource because he's been super generous with his time to be here and is happy to answer lots of questions. But I'm going to turn it over to him. If you just kind of want to introduce yourself and maybe talk a little bit about how you got into this field and kind of your financial background as well.
Okay. My name is Eric Nisall. I'm basically an accountant and tax preparer specifically to bloggers and freelancers. That is my target clientele. I don't advertise as a general practitioner or anything like that. I specifically go after people who are in the online space. My degree is in accounting. My entire working career has been in accounting. Basically, the better part of the last 2 decades. I am 41. I don't look it, but I am experienced. So don't worry. I'm not still in college or anything like that. Basically, I got into where I am now. I've been blogging since 2008, and I'm part of this community called FinCon, the financial bloggers community. And they actually pushed me into getting into specific, niching down this far into working with freelancers, bloggers, anybody with online businesses, because a lot of my friends are writers. A lot of my friends are bloggers. I have friends that do web design, SEO work, all sorts of things in the online space. And they're always telling me that people are coming to them and asking them, what do they do for this stuff? And so one of my friends who does design and now does support for a couple major plugins, we were on the phone together and we were just like, okay, we're just going to do this. I was already incorporated in everything. I already had a business and a logo and all this other stuff, but I was at the point where I just said, I'm not going to do this anymore. I can't, stretch myself too thin because I was still working. I didn't have the time to try to, do all the marketing and everything. So we already had a built-in audience. So we were both on our computers on the phone, and she was on GoDaddy, I was on GoDaddy, and we were just throwing out combinations of names. So we landed on AccountLancer, combination of accounting and freelancer. And basically that's how I got to where I am now. Next month is 2 years that I'm working for myself. That's probably the only anniversary that I actually know of. I do not know my blogiversary or any of that other crap. I just know that it's around the 2008, 2009 time frame. So yeah, that's really what really got me to here and why I'm working with specifically people in the freelancing and the online business space. Doesn't really matter what kind of a business, as long as it's not, an online like dropshipping place and stuff like that. I'm tired of dealing with those things. I like to deal with the simple people, freelancers, coaches, writers, bloggers, brand representatives, stuff like that. People who do social media programs for the big brands. I have all those people in my rotation of clients. But there's a lot of simplicity that people overlook, because the very, very first problem that I see with people is they rely on Google. They do a Google search. They rely on Facebook searches, their groups or whatever. They'll take advice that anybody gives them. One of the biggest mistakes that I see, and this is what I'm going to really go over in the next few minutes, is the biggest mistakes / most common questions that I get. And the first thing is, what do I need to do to be an official business? Do I need to incorporate? Do I need to get an LLC? Anything like that? And I always tell people, there's one thing that you need to do. Stand up and say, I'm a business. That's really all it takes. You don't need any kind of licensing that says, I'm an LLC or an S corp or a partnership or anything like that. A business is just somebody that operates things on a professional level. You provide a service or a product and you get paid for it. That makes you a business. So you don't have to worry about doing any kind of single member LLCs or tax sheltering or any of that other stuff when you're first starting out, because it's just, there's no such thing as being a legitimate business without having a designation like that, like an LLC or an Inc. after your business name. You can just operate under your own name. And as long as you are collecting a fee for doing the service, you're in business. So that is, that's something that a lot of people don't understand. And along with that, you should not come to me when it comes to, do I do an LLC or do I do a partnership or get incorporated? Those are all legal entities, and they're regulated by the individual states that you're going to live in or that you're going to operate under. And for that, you want to talk to a business attorney. They're the ones that are going to tell you whether or not you're going to benefit from having that legal separation of having you on this side and the business as a separate entity on this side. Some people, they could get away with doing it with just insurance. A lot of writers, some of them, they just operate under their own names as solopreneurs, which is basically another way of saying sole proprietor, with just liability insurance or media insurance, because they don't have really business assets that need to be separate from their personal assets. But again, those are all legal terms. And who's going to know more about legal terms than an attorney? Definitely not an accountant, unless they're, an accountant slash attorney slash 10,000 other things. And I always recommend people never to go with somebody like that. Don't go to somebody who has 5 different designations, because they're not going to be an expert in any one of those things. You want to work with somebody who's an expert in their particular field. That's why I only work with, online businesses. And that's why I only do 3 things: accounting, taxes, individual taxes, and business taxes. So technically it could be 2 things, but I keep everything together in one little solid ball, because I don't want to spread myself too thin. And I want to show people that this is all I do. This is where my expertise lies. You don't have to worry about me. If I say that I'm going to be your CFP and I'm going to be your attorney, you're not going to have to worry about me saying, hey, I can do this, but I'm not really too sure about the other things, because my main focus is the other side. So again, just go with somebody who's just a regular attorney. Don't trust anybody online, random people in a group that says, oh, my friend is an experienced business. They've had like 5 businesses and they told me to do this. I take anything I find online with a grain of salt, because I find that they're mostly either over-exaggerated or oversimplified. And you need to protect yourself. No one's going to, that person's not going to say, oh, I'm sorry, I'm going to pay for your legal fees because I gave you bad advice. So you need to protect yourself. That's first and foremost. And leading into that, if you are going to do an LLC or do an S corp, don't run to LegalZoom or Rocket Lawyer or anything like that. It is very, very easy to do all these things yourself. I'm about to post a link in the chat. This is an article that I wrote on the subject, and I'm going to have a few of these as we go through all this stuff. This is what you need to know about quick and easy LLC formation. If you're going to be a single member LLC, meaning you're the only member, or a one-person corporation that you're going to operate as an S corp, you don't need to pay $150, $200 to an online service or an attorney to file this thing, because all you're going to fill out is your information. Like, you're going to repeat your information like 5 times. You're going to be the incorporator. You're going to be the registered agent. You're going to be the member or the shareholder. It's always going to be your information. And why would you pay somebody $150 to spend 5-7 minutes to fill out your information, repetitively throughout the process? Some states don't even require your information. They just need a couple of times where you enter your address. Michigan doesn't require you to put your personal information. So it literally is your address 3 times and you're done. So I think I worked it out. It takes maybe 5 or 7 minutes. Some of these places, they make like $850 an hour and up, for something very simple. And they're going to sell you, oh, you need to do a corporate seal and you need to do a binder with all of your documents and everything. Well, number one, nobody uses corporate seals anymore. Number two, when you do these things, you can just print out your articles of incorporation or your formation documents from your state's Secretary of State's office online. And it's basically, you're just paying the fee. You're not paying for a service or anything like that. Then you go to the IRS website and you get your EIN for free, and it takes like 5 minutes. And again, some of these companies want to charge you $70 to do 5 minutes worth of work. And a lot of them, they won't even give it to you on the spot. The EIN, you get right then and there. The incorporation, if you do your LLC, you may have to wait like a day or two, but it's done and it's waiting for you online. Some of these places, their bottom line service for $150, you're going to have to wait maybe 30 days. That's their time frame on the turnaround. When you can just do it yourself and save yourself maybe $250 and just be done with it in a matter of a day or two. And in the article that I just posted, I talk about all that stuff, and I show you the examples of the fees that people charge for this stuff and how they try to upsell you for garbage fees. And I also have a map that makes it very easy for you to just click on your state, and it takes you right to the department for you to do your registration. So you don't have to sit there and worry, oh, where am I going to find it? Where do I go to do all these stuff or whatever? It's going to be right in there for you. Very clean and easy.
Can you go into at what point in somebody's freelance they consider becoming an LLC? Like, what's the purpose? And is there
totally legal? It's totally for legal purposes. That's why you don't go through the IRS to do it. It's not a tax issue. It's totally a state issue. That's why you have to register with the states instead of doing it through the IRS, because it's governed by the states and it's totally for legal separation. There's no monetary amount. It's totally based on protection and separation of assets. So let's say you have, that you've worked a long time and you've accumulated a house and, cash reserves and all this stuff. And you have like jewelry, all this other stuff that people they collect. Now, if you set up a shop as a sole proprietor, you and the business are not separated by anything. The business is you and you are the business. So if anything happens to you personally, they could go after your business assets. If anything happens to you professionally, they could go after your personal assets. Again, I'm not an attorney, so this is going to be very rudimentary stuff that I'm going to touch on right now. If you do an LLC or a S Corp or a regular C Corp or whatever, you're getting a little bit of separation because you're creating a separate entity. So everything for that entity is going under its own information. So if you create your name LLC, you're going to open up a separate bank account with that name and that EIN. In that case, you have to get an EIN because the banks require it for the LLC, for a business account. So that's going to give you a little bit of separation. You're still going to be, you can still be liable for, going back and forth if you use business assets in your personal life or, personal assets in business life. I'm going to get to that. I think it's next. But there's no monetary amount that says when you hit this amount of money, you should go do an LLC. It's totally based on assets and protection. Because when it comes to taxes, a single member LLC and a sole proprietor are taxed completely the same. So I know that there's some BS out there where people say, oh, you shouldn't do the LLC until you make $30,000 a year. Why? It doesn't, your assets need protecting no matter what you have, no matter what your income is. So, you want to, that's why I say, talk to an attorney, because they're going to tell you when the right time based on the protections are. And there's a question on that topic. Let's see. Do you have a guide or some suggestions for when to create a doing business as or fictitious name? Yeah, anytime you're operating as something not your legal name, you need to do your DBA. That's DBA, fictitious name, same difference. You are allowed to operate under your legal name. So you could do Joe Johnson Accounting. That does not need, that doesn't need anything because you're using your legal name in there. Jeff Goins is a very popular writer. His business, every time you see him, is just Jeff Goins Writer. You can't mistake that. You know who the person is. Now, me, if I were to do Accountlancer as just a sole proprietor, then I would have to do a DBA. And the same things apply. You still have to do a separate bank account and all that stuff. And I'm about to get to that right now. You need to separate your money. Everything needs to be separate. There is no excuse for commingling because it's very easy to do. There's some people out there who they like to say there's no reason to get a separate bank account because all you're doing is incurring more fees. But here's the problem. If you combine all of your personal and business and put it together, you have to sit there and go through all of your statements line by line and try to pull that stuff out. It's not always going to be difficult to do that, but you run the risk of either one, pulling stuff that really doesn't belong running through the business, or two, you're going to miss items that should be pulled out and you're going to just miss it because the sheer volume of transactions that you have to read. So, I always tell people it's very simple. Just get a separate bank account, get a separate credit card, and run everything through there. And some people are saying, oh, Esther's twice the work because it's twice the accounts. Guess what? It's not twice the work because what you're doing is you're running everything through this small little funnel through your, on your business accounts. You don't have to worry about anything with that. As long as you're doing it the right way and running your business stuff through those accounts, you don't have to go line by line. You don't have to do any work. All you have to do is just make sure that on a monthly basis, you're reconciling and making sure that what's in there is supposed to be in there. And you're just making sure that what you are spending is actually business. You're not making a mistake. It makes things simpler at the year end as well, because if you give your accountant all of your statements, let's say you have two bank accounts, a savings and a checking account, and then you have maybe one or two credit card accounts. You have to give your accountant all that crap, and they're going to have to go through all those things and spend the time separating all that stuff out. And then they're going to have to keep calling you back and forth. Hey, what is this thing for? What is that thing for? Was this personal? Was this business? You're going to have to give them a lot of money in addition to the actual preparation fee. So not only are you going to save time, you're going to save a lot of money by keeping things separate. And Carol asks, operating as a sole proprietor in my legal name, do I need to keep my finances separate? Again, yes. It doesn't have to be a business account. If you want to do a separate savings account or a separate checking account, you can do it that way. It doesn't need to be designated as a business account unless you're using a fictitious name. And in that case, the bank is going to want you to get an EIN simply to match that stuff. But you need to keep them separated because here's the other thing. You're not guaranteed to get audited. I'm not saying that if you don't separate it, you're going to get audited. But if you do, or if the IRS asks you questions, you could simply say to them, look, here's everything I have. It runs through the bank here. All my personal stuff goes to my personal account. All my business stuff goes to my business account. If there's something that's, that got a little confused, it was totally on accident because I'm sitting here showing you that I am actively keeping them separate and trying to make sure that nothing is commingled. So you're going to get a little bit of a benefit of the doubt as well if something like that should happen, because you're showing proof that you are actively and you're proactive in making sure that you are not commingling things and trying to use your business for your personal funds. And that is what the second link about the personal piggy bank is. That goes through why, more in depth, why you need to make sure that you're separating it and how you should be taking money out of your accounts if you are using a separate account. All right, Leslie says, I have a separate bank account and a separate credit card for my business, but they are in my name. Leslie, if you are operating a business that is a separate legal entity, yes, you're going to have that in a separate name, because otherwise, you're still going to be liable, and that's the way business credit works. Small business credit, you are, even though it's a separate entity, you as the owner or the shareholder, you're putting your guarantee that the debts are going to be paid by you if the business can't pay it. But you should still run everything through your business name, just because it keeps things nice and clean. Jake says that his bank didn't require the EIN. Just use my social. I now have an EIN. Do I need to go back? Jake, I would at least call them. My bank is Wells Fargo, but I also have an actual business account, business checking, because I have an S corp. If you are not doing a separate business type of account. If it's just a personal account and you're using it as the fictitious name or under your legal name, you probably don't have to, but I would check with them just to make sure that you are not going to be penalized or have anything happen just because, every bank is different. They each have different rules. So I would definitely check with them on that. Now, it's all well and good if you're keeping your money separate, or even if it's not. Again, let me just say this very quickly. It's not legal. You're not legally, it's not a legal imperative that you separate your money, especially if you are a sole proprietor. But it is strongly suggested because you do get those benefits of the doubt, and it makes things easier, and you're saving money on the back end, and all the reasons that I put in that link. It just makes common sense to streamline everything and have one account that has everything for personal, one account that has everything for business, and just leave it like that and don't even worry about mixing it up. Now, what kind of people do you have in your group? What kind of freelancers? Are they nomadic? Do you have a lot of?
I think we mostly have people from the U.S. who are not. We have some RVers and things like that who are kind of moving around.
Okay, this is for you nomads and you travelers. This link is about location independence. Here's the thing. It doesn't matter where you get the money from. A lot of people make that mistake. They're like, oh, if somebody pays me from Utah and I'm in California, do I have to file, a Utah return? The answer is no. You have to file a return in the states where you earn the money. So if you're traveling across the country in an RV, and I have friends that have done this. One of my friends who has a very large affiliate marketing course and a very, very, very big blog. She just did like 2.5, 3 years in an RV, and now they just sold the RV and bought a boat. They have a lot of responsibility when it comes to taxes because you have to, every state is different. For instance, Washington, D.C. does not require a non-resident to file a return. But most other states, New York, California, if you spend a day in there and you earn money, you have to file a return with them as a non-resident. So this article is going to go over all that stuff and explain to you why location independence is such a pain for accountants or self-employed people. I'm sure some of you have heard of the jock rule. If not, think about a baseball player, a football player. They play their games and earn their money in all these different states. Then they have to play a different game. They earn their money based on what the number of games they play, or that's how it's all broken down. They don't just get one check for the whole season at the end of the year. So when they get paid, they have to have money set aside to pay for the state taxes and everything. So that's just along the same lines as the location independent people. You have to know what states are going to be requiring you to pay taxes there. And you're going to have to really be prepared to file multiple returns because the reality is it can happen. Jake, that has absolutely nothing to do with any of this stuff. Sales taxes, not self-employment taxes or income taxes. And to be honest, every state has something like this on their books. In case we do have anybody who sells products on here, or even anybody that buys stuff, you are legally required by your state statutes to self-report any purchases out of state that that come across state lines into your home state. You're supposed to self-report that stuff and then pay the sales tax on it. Every state on their sales tax reporting website has a form for that. So this really isn't anything new. This is just making it official. The difference is that now this is becoming something that's more unified and making things a little bit different and more difficult. But no worries, Jake. These things happen. Some people, they just hear taxes and they're like, okay, taxes is everything. So no worries. And since this questions are slow to come through, I'm just going to keep going with a few more things, and I'll just interrupt and answer questions in between. Another big thing that's really important to people is insurance, health insurance, taking care of your families and everything. Now, especially with this whole new tax law and everything, where the state deductions are much higher, they're pretty much double what they were. It's going to be harder to deduct your health insurance because, number one, it was already more difficult to begin with because you have to meet this floor. You already had to have more than 10% of your adjusted gross income in order to deduct that. And then on top of that, you had to itemize. But if they have this thing in the last few years called the self-employed health insurance deduction, this goes on page 1 of your tax return, meaning it doesn't matter how much or how little you have in medical expenses. It doesn't matter if or whether you can or not itemize deductions. You may be able as a self-employed person to deduct your and your family's health insurance premiums, medical, dental, all those co-insurance, if you have to have like a separate plan, all that stuff. And what that does, and it's confusing because there's a very difficult part. If your spouse or you are even eligible for coverage through a group plan, employer, school, something like whatever it is, you cannot claim the self-employed health insurance deduction. Even if you're eligible and you decline the coverage to go on your own, just because you're eligible, you cannot claim this. If you are part of a health ministry, health sharing ministry, whatever they call that, you cannot deduct that as health insurance because that is not technically insurance. That is shared cost, and you can only deduct literal insurance coverage. But because there are a lot of people who don't understand, the basics about, insurance coverage and premiums and all that stuff, this is something that has been passed around my community a lot because they're like, oh, well, I'm going to save like hundreds of dollars by doing the health ministry. I'm going to deduct that as well. And it's like, well, yeah, no, that's not how it's going to work. Or you have some people who one person, like I said, one spouse still works. The other spouse is a business person. They're an entrepreneur. And it's cheaper to get insurance outside of the employer, but you're still eligible. And that's what this article does. It breaks down the eligibility requirements in plain English. And all my stuff is in plain English. One of my friends reviewed a course that I wrote, which we're going to talk about a little later. And, one of the things that she said when we were doing her podcast was, that's probably the best thing. I mean, yeah, it's great that you did all this information, but the fact that it was in plain English and it was easy to understand for people who aren't financial bloggers and they're not, freelance financial writers and stuff like that, they could understand that as well. And that's what all this stuff is. This is taking the important convoluted issues and talking about it in plain English. I don't know if you heard, that was a loud crack of thunder. So if something should happen, I apologize. Generally, it has been pretty good, my power, my internet during this time. I'm in South Florida, so the rainy season gets pretty heavy, and we do tend to lose power quite quickly. But I'm going to just keep pressing on, and I may end up just talking and not even realize that I'm, not even being live. So if that happens, Laura will just send me an email or something, and I'll get it through my phone. Okay, question for the Facebook group. How do I find out the percentage of taxes earned from freelance income that I should be saving each month so I don't owe at the end of the year? And related question from email, what are quarterly estimated taxes? Okay. Here's the thing. Quarterly estimated taxes, it's a misnomer. It's very important to understand that. They're called quarterlies because you pay them 4 times a year, but they are not based on actual 4 quarters, like every 3-month period. They are done, and I'm going to put this into the chat. I don't know if I should because this wasn't from the chat. It was from the Facebook group. So let me do it this way, and then they'll be able to see it on the replay when they watch it. The first period is January through March, January 1 through March 31, and that's due April 15th. The second period is April 1st through May 31st, and that's due June 15th. That's only 2 months. So right there, you see why it's not real quarterlies. The third quarter is June 1st through August 31st, and that's due September 15th. So that's back to 3, which is a real quarter. And then the fourth period is September 1st through December 31st, and it's due on January 15th of the following year. So that's 4 months. So you're really going 3 months, 2 months, 3 months, 4 months. Not really quarterly. It's a misnomer. But and the reason why I go through this is because a lot of people say, I had no idea. I thought it was like really quarterly. So your payments could be off. Like you might be thinking, the second quarter is due July 15th because, the second quarter would be the second 3 months and you'd already be late. So you got to be cognizant of the fact, put it in your calendars right now if you have to. Just say, quarters are ending not the right, not calendar quarters. They're IRS quarters, which is stupid, but I don't write the rules. So that answers that part. Now, what they are is it's essentially your way as a sole proprietor not on payroll to get your federal taxes paid in equally throughout the year. So think about when you were an employee. Your employer would withhold your Social Security, Medicare, federal withholding from your paycheck every month, or every week, every 2 weeks, whatever. You would never get your full salary. They would remit your taxes on your behalf. This way, you're getting credit for your Social Security earnings for later on in life and for your federal taxes. So when you do your returns at the end of the year, you can say, okay, I have this amount that I owe that I'm liable for. This amount was withheld from me. The difference is, I owe or I get back one way or the other. Quarterlies are withholding for self-employed people. And I'm going to combine the two questions now because they go hand in hand. First thing is there's no easy way to do it. So the way I recommend doing it is self-employment tax. Just the self-employment tax is 15.3%. So you start with 15.3%. Then you add your federal tax rate from your previous tax return, and then you add your state tax rate if you have state taxes. And if you can, save that percentage off your gross, off everything that comes in, because that way you're over saving and you will have a buffer. You're not going to be short. So in case you have a bad period or whatever, you can't say, I don't have enough money because you're over saving to begin with. Now, do you have to file them? Yes. And here's why. The IRS doesn't want you to do it, where you pay everything at the end of the year. You don't have to pay if you owe less than $400. So if you're just starting out and you're only earning like pennies or dollars, every week for the first 10 weeks of business, you don't have to pay tax, estimates on that. Once you owe $400 or more, then you have to start paying your estimates. And the reason why I say you have to pay them, not only because the IRS wants you to do it, it's just easier to do it that way. I mean, if you think about it, physically and emotionally, what's easier? $1,000 4 times a year or $4,000 one lump sum when you're not expecting to pay that, So I always imagine that it would be easier to write a check and to come up with the money, first of all, to just do $1,000 4 times a year rather than, do nothing all year, go to your accountant or go to TurboTax or whatever you're doing, and then be like, oh crap, $4,000 is my bill. Number one, you're going to get a heart attack because you're not expecting it. And number two, a lot of people don't have that saved up because they're not thinking about saving for taxes. So if you're doing it quarterly and you're being vigilant about it, then it's going to be a lot easier to do. And it's going to be a lot less of a heartache to do it. You're not going to be like, oh crap, I'm getting rid of all my savings. So if you're saving, if you do it, I know it's a very rudimentary calculation, but because everybody is in a different situation, I'm in Florida, we have no state sales tax. California, you go up to 13%. So right there's a big swing. I can't tell you, save 30% of everything, because if you are making, this much money up here versus down here, your rate is going to be different based on both your federal and your state rates. So the best thing to do is use your tax bracket from last year as a guide, or the IRS has calculations. They have tables that tell you based on your income and your exemptions, well, not exemptions anymore because nobody's doing that. But based on your income, it's going to tell you how much you're going to owe at the end of the year. So you can use that as an estimate as well. The point is that they are estimates. You don't have to be exact to the penny of, any calculation. You just want to make sure that you are filing on time and you are getting somewhere close to what you think you're going to owe. And one thing I do want to say specifically about the calculation is don't calculate every quarter separately, because taxes are a sliding scale. They take everything into account as you go through the year. So if you look at and you say, I make $20,000 every quarter, that's great. But if you get to the third quarter and you're making $60,000, that's 3/4 of $20,000, you're going to be in like two higher brackets than when you started it. So, let's just make up a number. And on that $20,000, that's the 12% bracket, just for, just up to $20,000 period. So in the first quarter, you're saying, okay, I made $20,000. I'm going to be in the 12% bracket. I know that calculation. And then come the second quarter, you're going to say, oh, I'm at $40,000. I'm still in the second, luckily that might still be in the same bracket, depending on if you're married, filing joint, separate, single, whatever. The point is, as you earn more money, you get pushed up into brackets. So you can't look at your quarters in a vacuum. You have to look at everything, in total, if you're going to look at it that way. And I recommend doing it that way. And that's how I calculate it for my clients, because if you have a business, let's go back one step. If you have an accountant, they will tell you, and there's people online that say, take last year's tax liability divided by 4. That'll be your estimates for the current year. That's all well and good if you're steady, if you don't have any ups and downs and, you're not doing anything. But if you were here last year and now you're up here this year, using last year's figures as an estimate base, you're still going to owe a ton more when you file the returns, and you're going to be hit with what's called an underpayment penalty, because you're probably going to be very far off. And the same thing happens if you start off here last year and you're down here this year because of a recession or because you decide to scale back or whatever. You don't want to use a higher base to estimate your taxes when you're not doing as well, because you're going to need that money in your pocket, not to be put towards taxes. Yes. As far as recommendations for good affordable programs for freelancers to capture their income, expenses, estimated taxes. This is where my course comes in, and this is where some debate comes in as well. There are a variety of programs out there. You have Xero, you have QuickBooks, you have Wave, and FreshBooks. Those are the 4 most common ones. Number 1, I never recommend Wave. I never recommend FreshBooks. FreshBooks is a glorified invoicing service with a feed aggregator. Basically, it just takes your bank accounts and you can sort them and classify them, but it's not an accounting software. It doesn't allow you to do reconciliations. It doesn't track balance sheet accounts, meaning you can't see what your balances are in credit card accounts or payables and receivables and any of that other stuff. It only focuses on your income and expenses. And with that, and I actually spoke to them about it, and their product manager said that he agrees that it is not a very capable accounting program the way it is right now. They're working on changing it, but as of now, I only recommend that for invoicing. Wave, I have a client on Wave. He's looking to get off of it because the way that it works in terms of importing transactions, it's not very intuitive that way as well. Xero, it was something that I would recommend, but they had dropped the affiliate program for, I think it was 90% of the people. And a few of the people that were in my FinCon group, and that they would go in, they would send these people out to our conference every year as a brand representative to get to know the people and everything. They're gone. And as far as I know, they haven't been replaced. So, that to me says that there's something wrong with that. Plus, I don't think they're based in the US. So I actually have a problem with recommending foreign companies, because if you do have a problem, you're going to have a hell of a time trying to match up with them with support. They're going to be working when you're sleeping. You're going to be working when they're sleeping. It's going to be very hard. So that leaves really QuickBooks. And I am a QuickBooks Pro advisor, but I think it is the most well-rounded and the most complete program. It has various levels that you can use. The best thing about it from my point of view is if you have multiple services or multiple segments to your business, they have this thing called classes. And what it is it enables you to tag your different services so that you don't have to create 15 different income accounts and then 15 different expense accounts to go with each of your services. So let's take somebody who has 5 different websites. The way that you would think about it normally is you would have advertising income site A, advertising income site B, advertising income site C. That's just a huge pain in the butt, and you don't want to do that. With classes, you take everything in one shot and you put it all into this one income account. But from there, you're tagging it. So it's the same thing like with your email marketing. You could run a report and just see what income and expense items are tagged to that segment, that website. And you could do each of those individually to see which ones are performing best, or you could do your whole company as a whole. Now, getting back to my whole course thing, that is something that I really, a lot of people ask me about. I'm like, oh yeah, I'm the one idiot who's going to make a course that would literally take business out of my pocket because I'm teaching you how to do your own bookkeeping, and that way you wouldn't need to pay me. But here's the thing. I'm very transparent. I cannot take somebody's money if I see that your net income every month is less than my fees would be. I can't do that. And if you're just starting out, or if you're not making a lot of money, you don't need to be paying $15, $20, $30, $40 or whatever for any app, regardless of how good it is. You need to be taking that money and reinvesting it into your business so that you can grow and you can earn more money. So what I did was I created a course, and basically what I do is I literally teach you what income means. There's not, income is not income. If you're a blogger and you receive a product to try and write about, that's income. Income is it's not just money that you receive. It's, something that you get benefit from. And I go over all the different kinds of incomes, and I go over all the different kinds of expenses, what you are allowed to legally take as a business deduction. And I teach you how to see what they are. And I teach you how to separate everything and how to track it. And as part of the course, I give you a very, very in-depth spreadsheet, because I hate paper. I hate spreadsheets personally, but I am the type of person that, the best budget, the best diet, the best anything is the one that's going to get you to stay on track. So I know that a lot of people like spreadsheets, and they're cheap, meaning free, essentially. So what I did was I created a spreadsheet that you literally, every month has its own tab. You put in your income and your expenses. At the end of every month, it feeds over to a summary tab, and you can see month to month to month to month, all 12 months together, and you can see how everything is stacking up. And it also has another tab on it, which is a bar chart. So you can see side by side your income versus your expenses, because some people are visual that way. And then it feeds into another chart, which is a filled in line graph. So you can see where your net profit is going throughout the year. So you can see all the ups and downs and what trends you're having. And a lot of people, some people like to see the numbers. So they want to see side by side the numbers, and they can say, oh, this month and this month and this month and this month, they all were pretty simple, pretty steady. But then I have an increase here. Some people, when they look at numbers, they go blind, so they like to see, the color charts and all that stuff. But the point is that it's already pre-filled with the most common expenses that bloggers, freelancers, and most online entrepreneurs would encounter. And it gives you a description on the spreadsheet of what would go in there. Plus, in the course, you also get worksheets that you're going to go through that, before we even get into anything, first thing I do, I tell you, here's your income spreadsheet, here's your income worksheet, list all your sources of income. Then as you go through the course, you're going to tag it, and it's a 2-column thing. You're going to write next to each source of income what kind of income it's going to be. So it's going to be advertising, product-based, whatever you want to call it. And that's going to match up to the line on the spreadsheet. So everything is going to be just one smooth progression, so you're not spending all this time spinning your wheels, going back and forth to Google and to your spreadsheet, and then to Google and your spreadsheet. It keeps everything all together in one tight bundle so that you're saving your time and you're saving money by not having to pay somebody, or, even if it's, you get what you pay for. So even if you find somebody who's going to do a bookkeeping job for you for $10 an hour, you got to think, how good is this person going to be if they're only charging $10 an hour? And again, if that's all you could afford, you're better off just spending a couple $100s on a course that's going to, just be done and over with, one time, and then you're going to save yourself for the rest of the next year, 2 years until you build up. You're going to keep being able to put that money that you're saving into your business and grow it to the point where then you could say, oh, hey, I could go get QuickBooks, or, oh, I could go pay somebody $200 an hour, $200 a month to do my bookkeeping, and then tell me what my quarterly estimate should be, and then maybe even do my taxes all the way through and just be everything for me so that I could concentrate on doing what brings in the money. And another mailed in question: if I'm outsourcing to other freelancers, do I have to file tax paperwork for them? Is what I pay to my subcontractors tax deductible? Fun stuff. This is probably my most shared article ever. Knowing when you need to pay, when you need to file 1099s. It's a very, very difficult thing to deal with. Number one, anybody that you pay, anytime you spend money on your business, that's a legitimate business expense. If it's somebody who writes for you, does your website maintenance, does your logos, your images, any of that stuff, those people are tax deductible expenses. You could pay those through your business account. Now, do you have to file tax paperwork for them? It all depends. Now, the general rule is if you pay somebody in cash or equivalent, meaning cash, check, or ACH, which is bank-to-bank transfer, and you pay them more than $600, you have to send a 1099 for them. If you pay them less than $600, it doesn't matter how you pay them, you don't send them anything, because the government created this Paperwork Reduction Act, which that's why they have it at $600, so that not every single person, you could pay somebody $50, or you could have like a whole staff of writers that, you could have like 50 writers that maybe each one got $100 during the year or something, because each one has its specific specialty that they write about. So, you have to spend out like, 100 writers, 50, 100 1099s at the end of the year for a little amount on each one. So if you spend, if you pay somebody less than $600, you never have to give them a 1099, period. More than $600, it depends on how you pay them. If you pay them cash, check, or ACH, or Zelle or Venmo, yes, you have to give them a 1099. If you pay them via PayPal, via their own credit card processing system, QuickBooks payments, Stripe, Square, stuff like that, you do not have to give them a 1099, because it's called PSC, a payment settlement entity. They are the one that handles that. Now, there are accountants out there who say we should send them a 1099 just in case, to cover our butts, whatever the excuse is. I call BS on that. And this article that I am posting to the chat is going to tell you not copy the right one. It's going to tell you exactly why you do not need to be sending certain people 1099s, and you're going to save a lot of money doing it, because the way it works is the instructions on the 1099 form literally says, if you're paying somebody this way, you should not be sending them a 1099, period. It says it on there. If the payment could be reported on the 1099K, which is the credit card company's 1099 to that person, then you do not send it to them. Because what happens is, if you send them a 1099 and the credit card processor sends them a 1099K, they're going to be reporting double income. Then the IRS is going to come to them and say, you're reporting $100,000, but we have 1099s totaling $200,000 for you. Where's the difference? Then your contractor, who's your partner, is going to get pissed off at you, because you're creating headaches for them. you're creating more expense for them, because then they have to go either waste their time doing it themselves to get all of their information together, or they have to call their accountant to do that for them and pay the accountant for their time, and it's just not worth it. So this article about your accountant charging you unnecessarily for 1099 and giving you bad advice, I give you the images where it shows you not to do that. There's actually, I think it was Bluehost is the example in the article. They sent an email to a client of mine saying, this is why we're sending you the 1099, even though they pay out via PayPal. And the frequently asked questions page that they referred them to specifically says that they're not supposed to get a 1099. Another problem is only certain people only certain business entities are supposed to get them. If you operate, or if your people operate as an S corp, you're not supposed to send them a 1099, regardless of how much they spent or how much or what method of payment. The only S corps that get a 1099 would be lawyers. There's other rules and everything, but nobody's paying farmers. I can guarantee you, none of you are paying farmers, so you don't have to worry about that. But that's why you're required to get a W-9 from people, because that's going to feed into the question of, do I have to send you a 1099 or not?
Yeah, and I'll just chime in here too. I know a lot of you use Upwork, and PayPal and Upwork both will send you their own 1099 forms. And it's happened to me probably 6 or 7 times where I have a client who thinks they're doing the right thing. And so they're sending me a 1099, say for $20,000, but that was also captured sometimes twice if the money came through PayPal, 3 times if it came through Upwork and I transferred it to PayPal, and then they also 1099 me. So that was something I didn't know when I started. I thought, I'm being so efficient. I'm moving money from Elance and Upwork over to PayPal and then to my bank account. But the IRS, just like he was talking about, sees that money as different, even though it's the same. And I paid taxes on the actual money. And let me tell you, you want to avoid that if possible. It is a literal mess to sort out. It took my accountant several weeks to, I had to have screenshots and everything of, here's the exact $200 being transferred from there to there to there. It's the same $200. It's not $600 or $400. So tell your clients that if they're paying you through these other places that are going to give you a 1099, tell them they don't need to 1099 you for that same exact money.
Send them this link.
Yeah, use that link.
That's literally what I do. I have people in all these different groups that I belong to. I give them that link. And I tell them, send this to them, explain to them, briefly that you don't belong receiving a 1099. Tell them that this link that you're sending is from an accountant who is breaking it down specifically, step by step, why you shouldn't be sending it to me. And that's why I said this is like one of my most commonly shared, links. I've had people tell me this, just sending this to people has gotten me off the hook from a lot of headaches, because they said, I didn't know that this was the case. I was told that, you have to do it regardless of how you paid them, as long as it's over $600. And, I've had people that even my own clients have had to do it for. And, the people that would respond, they'd be like, oh, wow, thank you for doing this. Now you just saved me a couple $100, that I don't have to go out and, pay the service, 1090efile.com or whatever it is, or to go out and buy this stuff and then mail it and everything like that. So, if anybody is giving you a hard time, just send them that link and explain to them that this is from an actual accountant. It's not from a freelance writer who, put things together from, various sources. And, trust me, I'm not bashing freelance writers. A lot of my friends and clients are freelance writers, but they don't know the specifics of a lot of these things. So you need to be able to say to this person that you're that's doing this to you and possibly causing you these headaches that, hey, this is the truth. Just read it and show it to your own accountant. And if they have a problem, maybe it's time for you to switch accountants. And also it applies to you too. If any of you have an accountant who are telling you that you need to spend the money to have them give you send out 1099s on your behalf to people that that you paid only through PayPal, tell them, look, here's information. It's going to show you specifically in the instructions where you're supposed to, when you're supposed to send it out and when you're not. And, Same thing with you. If your accountants don't want to do that, then maybe it's time for you to find a new accountant who's not going to charge you unnecessarily for something that should not be done. Not that it could or could not be done. It should not be done based on the information that comes from the IRS documents. Let me ask you a question. Do you have a lot of people who are in front of the camera in your group?
What do you mean?
Let's say people who do video, people who are very, very video video intensive, or very big on social media in terms of Instagram and imagery and stuff, like taking pictures and stuff like that.
I think we do have some for sure.
Okay, so there is something that I wanted to address to them, because nobody talks about this ever. Here is information about looking good in front of the camera. You see all these people that they go out and they buy all these outfits, and they have like a makeup kit that has it looks like a professional and all this stuff. That's not deductible business expenses. Anything that is suitable to wear outside on the street is not a business expense, unless it really falls under three categories. A uniform, which, let's face it, a police officer, a firefighter, an athlete, they're not wearing their uniform to go to the grocery store, if they don't have to. If it's on their way from work, yeah, but they're not going to go get dressed in that uniform to go do stuff. If it's not professional items, like if you're buying makeup from a professional source, not CVS, not Walgreens, but the same place that the team from the the news stations, where their makeup and people get their products from, that's not deductible if you're not getting it from there. And if you're just using your own stuff, it's clothing in general, you can't deduct it. So if you are in that field where you're doing brand representation or whatever, or a lot of your stuff is in front of the camera doing videos, and you want to deduct stuff. One of my clients just had a $5,000 expense. She hired a stylist, and she's a published author and a speaker, national speaker. She goes all over the place speaking for big banks like Schwab and Capital One, and she's spoken at Harvard. A lot of stuff. But she would always use her, like she just posted on Twitter, she had just an outdated sense of style, and she didn't know anything, and she knew that she needed to upgrade. So she hired a stylist, and $5,000, they literally went through and they got everything out, donated all the old stuff that she didn't need, developed a plan, picked out her personal style, came up with all these ideas and everything. If you're going to do that, that's a service. You're not buying clothing. You're not buying makeup. You're paying for somebody to style you. That you could deduct. If you have a friend who's a makeup artist or a hairstylist, and you want to pay them to come out and do you up for a shoot or whatever, that you could deduct and save the money on buying the stuff yourself, and just pay them to do it with their own supplies and everything. That you could do. And that's what this article is for. It explains to you why you can't deduct like your own stuff. And it has IRS issues, case studies and all that stuff, and legal issues. That says there was a broadcast journalist who tried to write off her hair and her suit jackets and her underwear and all this other stuff. And it explains, why you can't do that, and then I give you, like I just explained, how to get around that rule. I have, a few bullet points of how to go about getting deductible expenses related to how you look on camera, so that you don't have to worry about losing out on all that money and paying it out of pocket.
Okay, great. Well, we're coming up on the end of the show. You've done an amazing job answering all these questions. Anyone who has any last minute questions, go ahead and pop those in the chat. And while we're waiting to see if any more come up, why don't you tell us a little bit more about your course and who that might be right for? Okay. I'm a very transparent person. Like I said, I'll turn away business if I can't morally and consciously, take their money. So on the webpage for the course, I actually answer
questions like that. I anticipated somebody saying, hey, who should take this course? Who shouldn't? I explain it. It doesn't matter what level of blogger or freelancer or business person you are. If you're a beginner, you need to be taking this course because, like I said, you're going to be able to save all that money on recurring subscriptions and monthly accounting or bookkeeping fees. And a little one-time payment is a lot better to do than an ongoing monthly payment. Even if you're a medium income person, you could also benefit because you are going to be able to learn these things and not waste time going back and forth to Google every time you have a question. You'll have everything right there in the palm of your hand, one handy resource that you could go to for all your questions. Even if you're a superstar, like some of my friends who make 7 figures off their blogs, even they could take this course and benefit from it because, like I said, there's some accountants who don't do things the right way. Some of them, they're just outdated and they don't understand what new businesses are. And I'm sure a bunch of you have come across people who said, what's a blog? What's a freelance writer? How do you make, earn a living doing that? There's a lot of accountants who don't understand this stuff. There's a lot of accountants who, when it comes to these 1099 issues, they're just not up to date, or they don't want to, say, hey, I'm going to learn about these new things. I'm just going to keep doing things as we did it because it worked back then. It should work for me now. So even if you're a superstar 7-figure blogger, knowing this stuff for yourself, you'll be able to look out for yourself and say, hey, how come you're charging me for this stuff? Or how come you told me that I can't deduct my home office just because it doesn't have a door on it? Because let's face it, if you live in a loft, lofts don't have rooms, but you can still have a dedicated space that's legitimately a home office. So even if you're making a ton of money and you hire somebody else to do all your stuff, it'll give you that ability to see what they're doing and and question them and know what's going on with your stuff. Even if you're a bookkeeper, if you're an existing bookkeeper, you can take this course and now you'll have another segment that you can market to, because online businesses is still a brand new thing and not everybody understands it. So if you want to take, not just be a bookkeeper for, let's say, local businesses, and you want to expand your reach, you take this course and now you're going to know everything that they know. So, that'll help. I also anticipated somebody saying to me, hey, why should I spend money on this if I could go to Google and get it for free? And by all means, go to Google, get it for free. I answer you on there too. I think there's 4 counters to that. One of them is me. You know who I am. You could go to my website and you could see my history. You could see all of the articles that I've been quoted in as an expert source. Huffington Post, Fox Business, The Penny Hoarder, The Simple Dollar, Lifehacker did a mini profile on how I saved to start my business. If it's good, if my information is good enough to be in their publications, I'm sure it's good enough to know that I'm a good source of information. But not just that, you don't know who these other people are. Like I said, a lot of these websites, they just pay people to write stuff. It might not be the most complete information. I know I had a problem with a blogger a few years ago who did not specify that you have to itemize in order to take charitable deductions. They said you may be able to, take this deduction if you, the way that they worded it, it was completely wrong. And if you just say one word wrong, it could change the entire context and the entire legality of a statement. So, you know what you're getting from me. Number 2, you're not going to be wasting your time. Everything is in that one package. You're going to have all of the explanations of what income is, why you need to treat it a certain way, what deductions are legal, what you can deduct. I have real world examples in there. I give you, the worksheets and all that stuff. So you're having everything all in one spot. You're not going to have to keep going back and forth. This way you can spend more of your time focusing on making the money. This way you will be able to spend that money, hiring somebody else
Oh, it looks like we might have lost your voice. At least on my computer. Looks like we've lost the sound. Um, it looks like we've lost your sound here. So what? Yeah, okay. So it looks like we're, of course, in typical Webinar Jam fashion, we've got a little bit of a technical glitch, but thankfully this week, it's happened at the end, towards the end of the presentation. Yeah, everyone's kind of sharing that we can't hear your audio, and I'm not sure, it just cut out in the middle of your sentence. But what we'll do is I will share the replay link from this training, and I will put all those links in there, and I'm back of all the links that he shared about his blogs, and I will put those in the replay email as well, so you can go, because it's definitely well worth reading to check all of those out. Thank you all for showing up and asking great questions. And if you have any, I guess last call for questions. But he's just, thank you so much for coming and answering everything and giving so much valuable information. Gets very confusing for people, and it's something that they put off because they don't know really where to get started. But I feel like you've helped. Yeah, he wants everybody to know thank you for coming, even though for whatever reason we can't hear him anymore. But thank you so much for your time, and I'm going to post all your contact information in the replay email so people can get in touch with you. And I thank you so much. I feel like I know I even learned things today. I was taking some notes too about some things that I picked up along the way. So thank you all. All right. Bye-bye until next week, guys.